All right, we're live. Welcome to Micky Does Bitcoin. This is episode 1 of our brand new podcast. If we get over 20 viewers and we have a bit of fun, we might do a second episode. Let's see. So I'm here with PBITTY, the weakest anonymous pseudonym on the internet. If you know him in real life, just click the X button, pretend you didn't be anything. And yeah, basically we decided we're a couple of Bitcoin plebs. We've been in this space for a few years. 3 to 4 years now, and it'd be fun to kind of riff about a few Bitcoin and crypto related topics, go over a little bit of news, market updates, see how everything's progressing. Is this the top signal, PBITTY? Is us getting into a podcast after so long in the space peak euphoria of the market? What's going on here?
Yeah, I think if we're starting a podcast, mate, I think it's all over. Down we go.
Be terrible.
What's the name of the podcast? Hey, what's the name of this podcast? Do we have a name?
I mean, it's Micky Does Bitcoin. We don't have like a logo or anything like that. We can rename it if you like.
So I think just for people who are listening first time ago, like they called it Micky Does Bitcoin. They named it after one of the co-hosts. I really wanted that to happen because now I'm just gonna pay you out every time we record about how you name the podcast after yourself. No, it's Micky Does Bitcoin. I like Micky Does Bitcoin. I
will happily rename it if you can give me a market call within the next month and the price is within, say, 2% of that call. I know that we don't trade short term. Think about it.
So, okay, wait. So is it the price that it hits, top price that it hits in the next 30 days?
Yeah. If you can give me, I'll give you a few days to go over it.
So let's call it end of May. By end of May. Let's call it now. So end of May, right?
Well, it's in 2 days, dude. All you got to say is, we're going to be between 53 and 54.
I said end of May. It's April, May.
Oh yeah, sorry.
So the top, the top price for May, I think.
Do you want a couple of days to think about this, or?
No. We should just talk about it through now, man. This is what the podcast is about. So,
what is it going to be?
I think we're probably going to have a more sustained accumulation. So I think that maybe we could get close to kissing the previous high. So maybe we're at and the question is, do we break through, right? So and May is earnings. Okay, this is good. This is a good thought process, right? So May is earnings season.
Give me some bullish. Give me some bullish energy.
Okay, let's talk bullish then. If someone comes out, there's some, there's been rumors, right? Yeah. None of them have been true. Facebook failed us.
What was the other one?
Walmart might be stacking, and then there's some China rumors that Alibaba.
Oracle.
No, Oracle's been and gone, man. They didn't stack.
Yeah, but I mean, it was a tweet storm that kind of.
Oh yeah. So there's been a lot of rumors. Let's assume then that there's something that's going to happen in May, because something should happen. Right. We're due for some news.
It's been quiet.
Also, we've got a lot of the banks on, right? So we've got JP Morgan, Goldman Sachs.
Yeah.
Who else has come on? I'm missing one, right? Goldman Sachs, JP Morgan, they're the main two.
Yeah.
And there's been others, like obviously there's Bank of America, but let's assume, and they're all hitting the streets selling it. I think if someone comes out with some news, we could blast through the previous all-time high. So I was going to say we could consolidate and just kiss it again, like in this massive ascending triangle that we're kind of in, if you draw it up. But let's assume that something happens, and if we blast through, given the range of accumulation, by the end of May, I think it's possible. Let me just look at it.
Let's give a 5% buffer either side.
Yeah, okay. So I think it's possible then that the bullish case is we hit 75K at the end of May.
All right, end of May. So is this a close above that, or is this if it just hits that
just
price?
a week? A week. All right. We can I win, Micky?
Can you win? All right. So I've got a month of calling it Micky Does Bitcoin. And look, if we get over 20 viewers,
so if I win, what happens? Do I get to change the name? That's the deal, right?
Yeah, you can name it. All right, let me just.
But until then, until I win a bet, it's Micky Does Bitcoin.
Yeah, and it'll probably take us a month to actually think of a name anyway. All right.
Yeah. All right.
75K. May. All right, cool. I'm down for that.
All right.
Yeah, kind of. Yeah, I think I could actually see that happening for sure. What if it goes up at like 85 or 90?
No, I win. And I definitely get to change the name. We call it PBITTY does Bitcoin.
All right, I'm in. So yeah, I think the deal is, look, we're going to have fun with this. If we get over 20 viewers, we will do a second episode. All right. So do you want to give us, my kind of Bitcoin origin story is pretty boring. Got in it for the pump, stayed for the revolution. Give me the 1 minute abridged version of when you got into Bitcoin, when you discovered it, why you decided to get into
my origin story is no more interesting, but I definitely knew about it in 2013, and that was the Andreas Antonopoulos kind of circuit tour. It piqued my interest as cash, but and sort of the ethos of the internet and a sort of a decentralized money for transactions that could be uncensorable. That was cool. But I was interested in getting in actually. And what happened was I tried to put money on Mt. Gox to buy, and Mt. Gox literally went under a few days later. And I was like, I got to step away from this Wild West, right? And then didn't come back until after the 2017 bear market when it was down 80%. And you're taught when things are down that far that there could be an interesting opportunity. Got in as almost like a hedge on my career because I'm in payments, and turned out for similar reasons went down the rabbit hole, became obsessed in probably 2019.
I remember because we worked together in fintech before, and it's interesting you say that because I remember you were getting into it as a head. You're like, I think my career direction is going to go into blockchain, and then you're like, I'm going to learn about Bitcoin as a kind of just to educate myself and learn about that, because that's probably the direction that my career is going to go. And then obviously you went down the rabbit hole, started accumulating en masse.
It was two things. It was either it's going to kill my career, or I'm going to get. And if it does kill my career, I should know about it anyway. So
yeah, absolutely. It's interesting you say the payments thing, because I remember in 2015-16, one of the reasons I thought it's not going to go anywhere, and we know that it's kind of not the best way to look at it. But I remember thinking that, I was coming from a fintech background, so I saw the issues with chargebacks and the issues with fraud online, and it's prevalent in the e-commerce industry. And I was just like, you need some kind of a mediator for e-commerce transactions. There has to be a middleman to work out these kind of disputes between buyers and sellers, but also to manage like just the massive amounts of fraudulent sellers and fraudulent buyers online. And in terms of like how that relates to Bitcoin is the narrative in 2017 and before that was blockchain, but also like digital currency. So it was about like the payment aspect of crypto or Bitcoin, and obviously like the whole bubble was about
that's like the least interesting part to me.
Yeah, absolutely, it is.
Yeah, it's funny.
Once it ticked for me when after that bear market, I kept following it and kept learning about it. I think I got in at the top and bought a little bit, like just went down like Coinbase and bought whatever name looked kind of good. But I kept learning about it in 2018, and I was just like, I was lucky to know some OGs who'd been in it for years, and they just said, look, this year is going to be bear market. It's a no trade zone. So I was like, all right, cool. Just keep learning, and then it's like, when all the sellers are sold and all the buyers are bought, it'll flatten out, kind of thing, and then it'll bottom. And the bottom was kind of like 3 times higher than the previous start of the previous bull market. But yeah, it's interesting. You buy Bitcoin at the price you deserve, as the saying goes.
You do.
All right. Do you want to give us a bit of a rundown as to where we are in the cycle?
Yeah, no, I mean, it's a market update. Where are we?
Do you want to share
53,000.
the price chart, or should I?
You pull it up.
All right, one second.
I'll talk while you're pulling it up. But yeah, look, I mean, I think everyone listening will know we're in the midst of what looks like a more sustained correction. I think look, we've gone up so far so quickly, right? Like people forget.
Yeah. I'll pop open the week. Can you see it? Can you see it?
Yeah.
Screen? Okay.
Yeah. Cool. So we're up a lot. We have outpaced that 2017. Look at it, outpaced that 2017 bull run, and it's time to take a breath. And when you look at what's going on chain, right, 14% of Bitcoin has changed hands above this $1 trillion market cap. 14%, and like, don't forget, there are people who I don't know what portion has been unmoved, like in the last year. Maybe it's normally around 60%, right? That's 14% of actually daily active supply has changed hands. So there's been a lot of buying and a lot of selling pressure at this point. I'd say we're flushing out some weak hands. I think we've got probably strong hands buying the dip, to be honest.
Well, that is what a dip is, right?
Yeah, but
the dip is bought by people that at that price point want to get into Bitcoin or add to their portfolio. It is literally the definition of a stronger hand buying.
Yeah, but I mean, I think if you ask a trader, like, it looks like price action weakness, but I look at it and go, this is the exact same dip, by the way, that has happened in previous cycles. I don't know if you've seen that chart, but the chart that maps the 3 cycles, we're in a sustained correction, right where we were in a sustained correction in previous cycles, which is kind of interesting, right? Like, it might actually relate to at about 2K, by the way, on the previous cycle. And if I look at, so we're in like week 11, right, of just sort of trending sideways and down a little bit. You can see it there. It's the only time similar to that was at around 2 to 3K, and it's what's funny about that price action at around 2 to 3K is it's kind of the base of the previous of what was the bear market, right, after 2017. It's where all the main accumulation's done, but it's also before the actual main parabolic move happens. So fascinating.
That's what is interesting about this cycle, because so you can see here, it's fairly obvious looking back on it. Resistance breaks through, and then on the 11th of September, or that week, on the weekly, back test that 3K level, and that becomes kind of the buy the dip. And then interestingly, like you said, it becomes the base of the next bear market.
Yep.
Which also
60K.
Yeah, which coincides
3 times.
Well, yeah, I mean, that would be the typical 4-year cycle kind of thing, and it coincides with the 200-week moving average, which
I was going to say
I mean,
it also
you just don't see
it's 3 times.
Yeah, it's just insane.
Yeah, but it coincides with also 3 times the previous high, right?
Yep.
So if we're talking about where this thing's going, even we're ahead of 2017, but if we mirror 2017 and 60K is the bottom of this bull market, and we can talk about whether that's even the case, like that's the bottom of the bear market, sorry, that would probably put us at a peak of around 300 or to 360K. So interesting.
If it drops back at the same percentage, right?
Yeah, if it does the same move, right?
It's almost too obvious. So the only time that we've gone below the 200-week moving average was in March last year. So the black swan
temporarily, I wouldn't even.
It doesn't count.
No,
it's a mass. Like it was a black swan event. Everything crashed, mass liquidity event. So yeah, it's really interesting. Surely it can't be that programmatic, though. Surely, surely it can't be. At the end of this year, we go up to whatever it is, and then a year later, we find a basis.
Let's talk about that at the end. Let's talk about super cycle and those dynamics, and I reckon that's worthwhile for a discussion at this point. Dan Held was just actually on Pete McCormack's podcast talking about super cycle again. It's out there. People are talking about it. I know Suzu's talking about it as well. So let's come back to that.
Love it. All right. Bitcoin dominance.
Falling hard. We're below 50%. I don't know if you saw
Yeah.
Yeah, look,
Oh,
I get why, right? Like, so I think there's two things here that are happening,
yeah.
and like many of the Bitcoiners said that it wouldn't happen again, that this was the cycle that would
Mm,
destroy altcoins, and I know Tone Vays has talked about that, and
yep.
he's getting a bit trolled on Twitter for it. But look, the reality is this is not the cycle that gets rid of altcoins. The altcoins can continue to live and breathe, off the market fluctuations. But one thing people should take into account, this is probably my only point on it, on
Yeah.
dominance, is it's not the best metric, because when you introduce a new coin, you do your pumpermentals, you hold and retain 80% of the coins, and you dump 20% onto the market. The thing moons, and literally Safe Moon is worth like what, $1 billion, but is it really worth $1 billion? And then everyone dumps,
Yeah.
and there's no exit liquidity, and the thing goes back down to zero.
So you're
A lot of
saying
Bitcoin,
that, yeah, the owners and the founding teams have such a high percentage of the equity in, well, not the equity, but the actual tokens, that it's not a fair representation of the actual volume that's being traded. So it could be worth $1 billion, but only 5% of it's being traded on the open market, kind of thing.
yeah, best, right? And so market cap is obviously being used for measuring what the Bitcoin dominance is. And
Yeah.
basically, scams pump the hardest, and they distort. We're in the part of the cycle where everything's pumping. So yeah, I'm not going to say that it's not because altcoins aren't pumping. They are, but also we've got Safe Moon, Safe Mars. We've got a Doge worth 50 bill. We've got everything pumping, and some of them are literally just manufactured market cap. And they of course push Bitcoin down. So Bitcoin has a much higher realized market cap than a lot of those coins.
Yeah, high realized market cap. I mean, if you're looking at this, you'd probably think that, because keep in mind that there are more projects, there are more altcoins out in the market now. And back in 2017, the bottom, the peak alt season was 35% Bitcoin dominance. You would think that perhaps it dips below that at some point in this market when things get really crazy.
Micky, can I ask you something?
Yeah, ask me. What's up?
You stacking those altcoins, bro?
Yep. Yep.
So let's be clear to the audience. This is I'm only in Bitcoin. We're a Bitcoin show, but you've got those sort of degen feels about you, right?
I'm still exploring long term whether we are
long
going.
term?
No. Okay. There's the trading side and there's the.
Okay,
I'm not
with you now.
YOLOing into Dogecoin because I think that it's going to become.
Well, that would be a trade. That would be okay.
It would be.
Oh yeah. It's a trade. It's a trade.
Like it'd be a trade if you want to play that kind of game. But in terms of like the direction of open finance and DeFi, I'm fascinated by it, and I'm still going to keep researching it. And by the way, if I think Ethereum has scalability, and I keep researching it, because it takes how long to understand Bitcoin fully? And I mean, you never fully understand it, but how long to get a really good grasp on Bitcoin does it take? 6 months?
I mean,
a couple months
maybe for different people. I mean, it might have taken you at least a year.
It did, because I was also a lot younger when I first got into it, so I was learning about all these kind of things. And you also need to get a feel for the market too. So like an interesting point is like some people who've just starting to get into it, one of the things they say is, oh well, like it's open source, you can just create your own coin, so how is Bitcoin scarce? I mean, it's such an obvious thing that we can argue against. It's not even up for discussion, but it's something people think about when they first get into the space.
Yeah, 100%. And we can cover that. We'll talk about that in detail, I'm sure.
Yeah, for sure. But anyway, as I was saying, I have a few altcoin positions. It's probably 10.
And look, I'm not. By the way, I know I'm coming off as the maxi, but I would say that we will explore whatever you want to explore. And my position. Look, and I think I've told you how I feel about altcoins. Like there is a there is definitely kind of a fun side to it. I totally get, there's this is like the gamer culture, right? Of millennials who have nothing to lose, playing the money game, right? But they're doing it on their own terms. They're not interested in Wall Street. They're doing it on their own terms, based on the cultural, values and norms of the internet. And they've just basically, we've created a whole different form of casino, which is, it runs alongside Wall Street, and that game is called altcoins, and that's to me. But that's actually the positive side, right? Like I think that
the fun side,
25, and you're stuck, and you don't have enough money to actually invest into Bitcoin, and this is like a big part of it. People are looking for a way out. It's a unit bias, but it's also just literally I want 100x now. Or I don't even understand Bitcoin enough to know if there's still 100x in it. And hint, there probably could be, and there is. But I get it, and so I'm not here to slander that. I totally get trading them to try and make more Bitcoin, and that's kind of how I feel about it. And then I think the dark side is almost the Silicon Valley side. I think that's it's Elizabeth Holmes, Theranos, and she's got her black box, and it's all marketing spin and
scams, like blatant scams.
And her box that supposedly measures blood and diagnoses you is literally the blockchain, and in that black box no one knows what's in there, and it doesn't even work, right? So that's the ugly stuff.
There is the fun side of it, and it's just a perfect storm, isn't it? Because you've got all of these millennials on TikTok, which is, have you ever downloaded TikTok and actually gone onto it?
Yeah, I have. It's crazy.
It is like, I don't know if you've ever been to Tokyo, but in Tokyo they have these, gambling's technically illegal, but they have these gaming kind of centers. I can't remember what they're called, but you walk past them, right? And the strobe lights are pumping. These machines, it's kind of like a game of luck where the ball goes down. I don't know how it works.
I know it.
It is insane. You just see these guys, it's like pokies in Australia. You just see these guys just pumping them. And TikTok is like that. It just has got the attention kind of aspect of it. And you go onto the algorithm and it's just, you can get sucked into it. It's crack cocaine on the internet. Yeah. But it's a perfect storm of, I was just going to say, like, of virality, of memes, and of that kind of discovery of what's going to pump next,
And actually, that's what I'm talking about, right? So you got Telegram and Discord, and you've got meme culture, and you've got TikTok, and you've just basically, if you're good at kind of navigating internet world, the norms of the internet, the social cues of the internet, being able to read through, I don't want to say read through the bullshit, because it could all be bullshit, but basically play that game. That's why you can do well. And you take those Fortnite skills and you learn how to read charts, and you get into these chats and you can make money.
Yeah, and it is kind of that, as well as that, there's the narcissistic element, right? Everyone's flexing on TikTok and things like that. Everyone's trying to get more attention, and it's like, if you can show a chart and you bought something and it did a 10x and you've got 20,000 followers, it's just, it's crazy. Perfect storm for it. Not involved in any blatant shitcoin projects. You might argue that they're all shitcoins, but anyway, we can get back to that.
We can get into that in more detail.
Yeah.
All right. What's next,
news.
mate? Are we doing news?
Yeah. What is happening? So the first one I think you wanted to chat about was Nexon announcing.
Yeah, I'll talk about Nexon. So Nexon has just announced they've bought 100 million of Bitcoin. Large public company, right, in Japan and Korea, and so. I think people forget that this phenomenon is worldwide, right? And the actual capital that can flow into this thing is not just in the United States. And we've talked about treasury allocation, and obviously we all know about the big ones, MicroStrategy and Tesla. But I think it's still a big deal, because I think at this point we're still at the point in the adoption cycle where it's kind of like a virtue signaling, aspect, and it's kind of forcing people's hands to discuss it. I mean, I've listened to so many people talk about this, but these conversations must be happening in every boardroom, because we're getting to the point where Bitcoin is no longer a speculation of being an asset. It just is an asset. And so this is everyone talks about, this is the cycle where we financialize Bitcoin. And if we financialize Bitcoin and you don't own any, you are actively short, and you must position yourself as so and defend that position, and otherwise go long. And so you can imagine when that happens, how many people who look at the underlying figures and performance of Bitcoin will probably go actively long, if everybody else does, because most people are sheep, and even Wall Street are sheep. And once people get in, you need to get in because everybody's in. And if you're not in, you better have a very strong thesis not to. It was easy to have the short thesis.
Yeah, the typical risk profile of a treasury asset, what does it kind of look like? And I guess it varies per industry, per sector. So I had a look at Apple, like just out of interest. They have all of their assets managed by some company in Nevada, but it's mainly like bonds and fixed income and things like that. So
I was going to say, Apple are super conservative, right? So they're literally, they're holding a ton of cash or cash equivalents, which is, to your point, like low interest bonds, basically probably government issued. And I think everyone talks about Apple as a prime example where, they only have to move 2% of their corporate treasury in, as call it an inflation hedge to their entire position, which is in the hundreds of billions of dollars in cash. And, there's a huge benefit to that, a huge return. And that would be, and for Bitcoin, it just, it pumps to the moon because
that's
that's
double the price within a week. But
or even so even, first of all, there's literally the capital allocation of $2 to $5 billion going in, which will pump the price, market cap wise, maybe 5 to 10 that, and so 50 billion goes onto the actual total price. But to your point, and then how many other organizations get in, and when you're holding that much cash and cash equivalents and corporate debt, the funny thing is Bitcoin is actually an excellent hedge to the bond market, because bonds, and especially government issued bonds, have sovereign default risk, right? And that is a market in of itself. That's the CDS swaps market, which is just a form of insurance, right? That you buy to protect yourself against bonds. And I won't go into a huge amount of detail now, but
that's long exposure to cash, right? To money.
Yeah, to money of a nation, right? And so Greg Foss has been hitting the pavements over the last, call it 5 to 6 months, experienced bond trader, saying, guys, look at Bitcoin. Bitcoin is the perfect hedge for sovereign default risk and counterparty risk for a sovereign default. And if he prices Bitcoin in his marketplace, which is in the credit default swap market, he puts Bitcoin at 100 to 160K. So anyway, all of that is to say, it's a good hedge for Apple, but that's just one example. There are many reasons why you might want to diversify your treasury.
Yeah, I wish I could just see what the typical asset allocation looks like. Like, do they get into things like property, collectibles, exotic investments, that kind of thing?
Oh, look, I think, for sure. Because, who was it? Ross Stevens was talking to Michael Saylor about, a CEO's job is two sides. It's the growth of the company and revenue, but it's also the balance sheet and being a good capital allocator. And a lot of the companies that we think about as being amazing companies, well, amazing, I don't want to be careful myself, but McDonald's is primarily in property. So is Woolworths, right? So they are capital allocators in that regard. They're not just driving the revenue of their core business, but they're actually driving the growth of the balance sheet through other means. And to your point, property, equity, other forms of investment, and stores of value, right? You wouldn't want to hold too much cash necessarily. So hence, diversifying into the property that you work out of is a big part of treasury allocation. Yeah,
there's that. And it's also like in the past, like you've never really had to think about the risk of holding cash, right? And that's starting to come to the forefront. It's like, well, 30% of the whole US money supply just got printed in the last year.
I mean, here's a crazy stat for you. What was it? The money supply has doubled in the last 24 months. I don't have the number off the top of my head, but it's something along those lines. I mean, it's crazy, right? So it's gone astronomical. And one of the things, we were just talking about how I got into Bitcoin in 2019. What many people don't realize is many people thought that the global financial crisis in 2008 came with a huge amount of money printing, and it did. But we printed, I mean, the US printed more money in 2019, more money than any other year. And that was a year that was before COVID hit. So I was already looking at this going in that was actually.
I remember you were telling me.
Like, that's when I got, that was like the final orange pill was around then. And it was around the repo market just starting to malfunction, and everyone could see that this was going in a very bad direction, and people think it's COVID, but it was already happening. And yeah. And of course, money printing's gone exponential since then, trillions of dollars last year. And to your point, the money supply is expanding at 20 to 25%. And so if you're holding cash, it's the melting ice cube that Michael Saylor refers to.
Yeah, it's crazy. All right, next one, oil and gas. What's going on here?
Oh, yeah. I mean, I just pulled out a tweet here from from Denver Bitcoin. By the way, he's pretty respected in the Twitterverse and on Bitcoin Twitter. And he's calling that you guys are going to freak out when you hear about which oil and gas companies plan to mine Bitcoin later this year. You're gonna crap yourselves. And I read that and I was like, I don't doubt it, because this play is going to be massive, right? Like I've heard other people talk about this. Again, Greg Foss is actually an example. He runs a company in Canada trying to capture the gas flaring. But I've also heard a lot of conversations on Clubhouse and people, and of course, Marty Bent, who does the great podcast Tales of the Crypt, has the Great American Mining Company, and he's working closely with a lot of different energy companies. And actually, the point I want to make here is these Bitcoiners are walking into these companies, they're laying the numbers down on the table. This is how you can convert your wasted energy into to cash, and not just any old cash, but the best money in the world that is going up in value, 200% compounded yearly. And here's how much money is sitting on the table. And these guys look at the numbers and they think it's some kind of a scam, because they can't believe that they can do this and that they have this opportunity in front of them. So I just pulled this tweet out because I think we're at this tipping point in culture where, obviously Bitcoin's going mainstream. The energy companies are looking at it. We've got a Norwegian billionaire who is actually an energy billionaire who's like written papers on like, he's a Bitcoiner now all of a sudden, and it's because of this. And I do think it's going to be very interesting to watch the network expand into the energy companies and how they're going to react, and how that is going to grow the network in its own way, in which only a proof of work system can. And it's going to be fascinating. And there's more to talk. That's a huge topic, and we can talk about that too as one of our topics one day. Yeah, it will be cool.
It's interesting. All right. So
you do one, Mickey. Have you got something that you wanted to talk about?
Well, there was an interesting little image I came across. Who are we going to credit here? PBITTY. This was cool. So it's a breakdown of some of the major companies and which are likely to buy Bitcoin next. Because we kind of move in these cycles where right now, the last couple of months, the news cycles have been a little bit slower, you would say, over the last 2 months. From December to February, it was insane. Every single day there was new companies, new organizations getting into Bitcoin. It was hyped up. So over the next part of this cycle, or possibly in the future, which potential corporations could be looking at, adding Bitcoin to their balance sheet as an inflation hedge, getting into the network. Berkshire Hathaway.
Rat poison. Yeah, that's what's. I think they're attributing the quote from
Charlie Munger.
Buffett, but Charlie Munger said it.
Yeah, rat poison squared or something. Oh, it was one of them.
Rat poison squared. I kind of like that quote. You know why? Because what they're saying is, I think they're saying rat poison is probably gold and a non-cash flow business, but Bitcoin is gold squared, and therefore an exponential form of growth and pricing.
Yeah, they're not technology investors. They never have been.
They never have been.
Yeah, so missed out on the whole.
Although they might buy, he might buy Coinbase because Buffett bought gold miners because they generate a cash flow, because gold miners sell their gold as quickly as possible and turn it into cash, as we learnt from Michael Saylor's debate of Frank Gustra. But because it generates a discounted cash flow, he can model he can buy that. So he's in on some gold miners, and he might buy Coinbase, I reckon.
All right.
Anyway,
that'd be interesting.
Picks and shovels.
But it looks like, Facebook would be the most likely, because they've got a lot of Bitcoiners on their board, right? And then DM is coming up.
There's an ex-CEO of the ex-CEO of PayPal, one of the original, OG PayPal OGs, is heading up that DM project.
If they're getting into the payment space, right, through Libra and DM, which makes total sense, they've got the network, right? So if they integrate payments and a wallet into Facebook across their apps, what have they got? Instagram, WhatsApp, Facebook, they're the three main. So you could imagine that if they're going to integrate payments into their app, it will be through stablecoins, and their goal is to make some kind of a stablecoin, right? Fiat-backed stablecoin. Bitcoin is a no-brainer because all of these things have happened over the last couple of years. They're going to be looking at Square, PayPal, these companies who have gotten into cryptocurrency and Bitcoin predominantly. And it's a no-brainer. That's where the money goes. That's what the market is telling you. If you're going to integrate a wallet into your services, I don't know whether it would be like, I guess you'd have to visualize it and think about how will it actually integrate into the current Facebook application. I mean, it will be a separate app, right? So DM or whatever will be it.
Well, I'll tell you what I love the expansion. Why I love the expansion of a what is essentially a decentralized open protocol is that Bitcoin will work with anybody, right? So in a typical world, the speed at which Bitcoin can be, goes into Square. Think about PayPal coming in. If Bitcoin was some sort of privatized company, there'd be lawyers, and it would take years. There'd be anti-competitive claims. Anyone can integrate with Bitcoin, and Bitcoin gives you all the revenue. You only benefit from it. So I think, to your point, I think Facebook will come in out of not only pure necessity, but because of ease of use and because there's money to be made. And unfortunately, I think it's the same reason why Facebook will probably integrate shitcoins, is because there's just money to be made, and everyone's probably looking at Coinbase and going, we can send any value, right? But they will have their own. They may have actually already assessed. I don't know, but they may have assessed this and already said, we don't actually need our own stablecoin per se. We can use someone else's. There's no benefit of controlling the stablecoin other than right, having a huge cash reserve, which you're actually making money off and fractionalizing, doing the fractional reserves off it. But to your point, I think they will go broader and wider than DM.
It will be interesting, and you would think it would be something like USDC maybe, that they integrate into their app, into their wallet. When there's but they have to be paying attention. I mean, they were talking about integrating and getting into cryptocurrency 3 years ago, 2017, I think it started.
I mean, they're not going to not see this through, right? They're going to see this through.
Absolutely. Look, it doesn't necessarily mean them adding Bitcoin to their balance sheet.
Yes, I was going to say that this is a discussion very different to adding it to the balance sheet.
Absolutely, yeah. But what?
I'll give you an example though. Like, it's hard to know who, right? But if any one of those companies in the tech space here got in, I think it would have, in terms of corporate treasuries, it probably has a cascading effect at that point.
Yes.
Like everyone, like I don't even know, I don't think it matters who, right? What we're looking at is whoever, you and me don't care who first movers are. We just care that they're our first movers because it will just catch fire. But here's another way to also think about it too, which is like, here's an unlikely candidate, but like imagine Ford, right? So Ford, their debt was almost deemed junk debt last year and pushed into the junk debt market because a lot of those companies are salvaged, right, by lowering of interest rates. I mean, they're essentially zombie companies. And, Preston Pish says a lot of these companies that don't make money can't afford Bitcoin. But one thing I do wonder is there could be some companies like a Ford who may get desperate and they may actually issue debt to buy Bitcoin and kind of conduct the Michael Saylor speculative attack, not because they're trying to attack the US dollar, but actually because they're actually going short the dollar and trying to go long a hard asset to try and be profitable. And we kind of saw that play with Tesla, selling some of their Bitcoin treasury leading into that Q1 earnings.
Tesla's definitely not a normal, typical corporation though. So I would say the first mover in terms of large business hasn't come in yet, but
agreed. I don't think, and that's to our point, we probably can't predict because it's going to be someone who is atypical, who can make an atypical play, especially at this level. But there are I'm hearing from people that we can't reveal that there are conversations happening and that there's an S&P 10
there has to
company.
Be. But this is just it's one on-ramp. It's one on-ramp. We have the ETF.
We have so many others.
Yeah, exactly. All right.
What's next, mate?
Tesla CFO on Bitcoin during the Q1 earnings call.
Yeah, it's probably a good segue, right?
So, they sold what, 9%?
I've had different reports, but 10% to test liquidity supposedly, but I don't believe it.
No, it was to show profit, right?
Yeah. So apparently, I also heard, it was to get profit. I believe it. The operating, I don't know how, but for some reason that number was included in operating profit, even though I don't see how Bitcoin profit could be operating part of your operational profit.
Because we run nodes in our Teslas, in our vehicles.
Yeah, it's exactly. And I think Elon, based on that decision or based on the number that he hit, got an extra 11 billion in options or something by hitting that operating profit. So there's a number of reasons to do this, and I, there was so much kind of FUD and on Twitter about it, but on the flip side, I thought it was perfectly fine. First of all, every time they talk about Bitcoin, like they did in this conversation, Bitcoin's a good decision, reasons to be optimistic. I don't care if Elon makes up that it was to test liquidity. The fact of the matter is he did, and it's more talk about Bitcoin. And these people, of course, corporate treasuries. If we're talking about Bitcoin being adopted in the corporate treasury, it's going to be traded around a core position. You're not going to they're not hodlers of last resort. They're utilizing it as a tool, and the tool that they need it for was, by the way, partly to generate profits.
Yeah, and I don't think it's bearish at all. It's 9%. It's not like they sold their entire position of Bitcoin. You have to expect that when you have purchased an asset that has gone up a significant amount in a very short period of time, and especially one that can be bought and sold so easily, like Bitcoin, you're going to sell some of it. You're going to perhaps in a year's time rebuy some of it. It depends on your, it just depends on where we are in the cycles, and it's not an all or nothing kind of situation.
No, it does do other things too. So, everyone can complain on Twitter, they sold it and made so much money and that's why they've made money. Well, that's good news for Bitcoin. Oh, so you're telling me that you make money holding Bitcoin on your corporate treasury? So I think that's great. I was thinking it was kind of interesting, because of the accounting rules, you can't mark Bitcoin to market prices, right? Like the price you buy it at is the price you hold it at. And if you're a non-profitable company, what you can do before earnings time is you could sell all your Bitcoin position at market if it's up substantially. You're not clocking a profit, so you're not paying tax, and then you can buy it again after the earnings call, mark to market a lot higher, right? And now your balance sheet looks even stronger.
Sorry, say that again.
So imagine you bought Bitcoin at 10K, right? Imagine you bought $1 million worth. Okay, and so, but you're a non-profitable company, right? So you're losing money. You're in a losing. You're living off scraps. You're living off your balance sheet.
Yep.
Right. Bitcoin goes up to 100K, right? So now you've got 10 million on the balance sheet, but your balance sheet only shows $1 million of Bitcoin because you're not allowed to market the price of that Bitcoin. But because you don't make any money, there's no tax implication. You sell it, right? Your company is still unprofitable, right? And then you buy it back after the earnings call at the same price, or if you lose a bit, whatever. and now it reads $10 million on your balance sheet, not one. So
Why can't
I'm
you
just,
mark to
this is just,
market on your balance sheet for
I
an
don't know.
asset
It's
that's gone
it's
up?
apparent. You can, but not for Bitcoin. They won't allow you for Bitcoin. I don't know what the exact accounting rules are, but unfortunately, it's at the price that you purchased at.
Right.
The market
okay.
knows, right? So look at MicroStrategy. They know the price of Bitcoin, and it's trading as a
Yeah.
Bitcoin ETF, even though they can't get around those accounting rules. But
Interesting.
that's just yeah.
Yeah. Okay.
What do we got next?
All right. Moving on. So we have the trajectory of the current cycle. Now, I know you're a bit of a super cycle pundit. I'll probably sit on the other side of the fence.
I'm not. Yeah, that's why it's going to be a good chat. I'm not necessarily a pundit, but I do like the idea of talking about it. I don't think we need to cover this piece, but I would say that this is exactly what we were referring to at the beginning of the podcast, which was, you can see that. Can you see on the map the circled dip? There.
I mean,
right there,
it's the same as in 2017.
Yeah, exactly. So like people should not be worried. We're at the same point of the cycle. I like what Adam Back was referring to there. We're essentially looking at a 300K Bitcoin price. If we continue to follow this trajectory, it's 800K. Well, sorry, we're looking at 300 if we follow 2017. We're looking at an 800K Bitcoin price if we hit the 2013 highs. And that's not out of the question yet, right? Like, look at where we are in the cycle. The cycle kind of follows the same trajectory for this point. It's when FOMO kicks in. How hard does it kick in, right? You can see when the cycle just gaps up. So where everything is going according to plan. If we do approximately half, somewhere in between the two cycles, we're looking at a 500K Bitcoin.
Ooh, get me bullish. Get me bullish. Tell me we're going to go there.
We're going there, mate.
We're going to Valhalla. Yeah, look, there's just so much more capital that needs to come in for that to happen. This isn't 2017 where the supply was lower, the price was significantly lower. There's so much more capital.
Let's talk about that in Super Cycle.
Yeah.
Section.
We will. All right. Next.
Don't let me forget that. You bring that up. You hold me accountable to capital flowing in.
We're going to talk about it. All right. The Bitcoin versus gold debate.
Did you watch it?
It was solid. Yeah, it was good. I think amidst all the kind of more personal attacks against Michael Saylor, Frank did raise some interesting points, which I think would be worth addressing.
I thought he got killed overall, though.
Yeah, he did. He did. I mean, Michael
got destroyed. He got laid out flat.
Yeah, well, Michael Saylor had a Word document up. He had all of his responses written down. You know, it's like one of those Hollywood heartfelt messages when they're addressing, in the black and white.
But Mick, that doesn't mean Frank didn't. It means that the right answers are the right answers, and all Michael had to do was write them down and deliver them.
Yes, 100%. It was definitely written down, though. You could see his eyes reading. But
I'm cool with that. He nailed it.
He nailed it. He came prepared. What were the points that Frank
Not like
made?
us. He's more prepared than us right now.
We aren't. We've got a few tweets open, and we're going to chat about the chart. That is it.
That's all we're doing.
What did Frank say? He mentions a couple of things that basically gold.
Example, you should have this written down.
Yeah, probably. Well, again, first episode. If we get more than 20 views, we will do a second one.
How's our live viewership count right now? What are we at?
This is pre-recorded, champ, so no live viewers.
All right, well, that's better than I expected. So that's
good. It's not zero. But he said that, look, gold hasn't gone into a true bull market yet because risk on assets is still pumping. And therefore, Bitcoin is acting like a speculative risk on asset. And when we go into the kind of next market cycle globally, gold will kind of have its day and have its time.
Yeah, look, I don't think the gold bull market is over, and I think that Bitcoin has probably outshone gold, and potentially, I mean, there's no doubt that some of the people even in the gold industry will admit that Bitcoin has sucked some of the liquidity out that would have gone to gold into it. I think the thing about Bitcoin though is it's risk on and risk off. I think it has both qualities. And so while Frank's saying, oh, look, you're performing like a risk on asset, I think we perform like a risk off asset as well.
Well, what would gold be if it actually did what it could do? What would the potential of gold be?
Yeah, I mean, gold has so many headwinds, right? Like, I'll tell you the biggest problem with gold and why Bitcoin benefits so much more from this. And I think this is kind of a point that Luke Groman, I think, has put on Twitter a lot. If you don't follow Luke, you should. You know, gold is physical and it's big and it's naturally centralizes because of the threat of violence, right? You know, if you want to hold your own gold, you can, but it's pretty cumbersome. And if you want to hold a nation's gold, it's probably sitting in Fort Knox in a bank. And so because it naturally centralizes and because you can't have a physically settled derivatives market, you know, most people can gain exposure to the price of gold without holding gold. And so the gold derivatives market is 20 trillion or bigger. It's way bigger than the market cap of gold itself, or the portion of gold being used as a store of value. And so because of that, you know, the liquidity is completely, that should go into the asset itself, the store of value itself goes to derivatives. And to be honest, the industry and the banks have been caught, you know, manipulating those markets. The beautiful thing about Bitcoin that I think people underestimate is because you can hold it digitally as a bearer instrument, it can naturally decentralize, and you know, you can take custody, Mick, of your Bitcoin. But the benefit of that is you can build a futures market on Bitcoin that physically settles. You know, whereas you know, most people, like you saw what happened to oil, right, last year when it went negative. It didn't actually, oil was still worth something. It was because there was a standoff between the people who can hold oil, the oil container companies, and basically the people speculating on the oil in the futures market who could not take physical delivery, and it was a physically settled market. And so they were forced to sell at any price, even negative, because they could not take delivery. Whereas Bitcoin doesn't have that problem. So Bitcoin is extremely efficient as a bearer instrument, and therefore Bitcoin can go to the moon, even with derivatives contracts built on top of it, whereas gold can be suppressed by cash settled derivatives.
That was the fascinating thing about it. When you go down the rabbit hole and you compare it to the current largest store of value, well, I mean, real estate, you could argue, is a store of value. We can get to that another time. But when you compare it to gold, like, you can't really buy physical gold. You can't carry it in your pocket. Bitcoin, you can be a custodian of it. And that's why I think it lends itself into, like, the OG Bitcoiners will always say, like, oh, not your keys, not your coins. But the reality is there are going to be custody solutions that scale up. Most of the market is going to just want to hold it in some kind of a custody solution. But I think it's just cool, the fact that you can actually have this digitally native store of value. You can take custody of it yourself, but you can also say put it, you know, when banks offer Bitcoin custody, you can use it as a collateral asset as well. You can't do that with something like gold, and you can also potentially earn yield on it. What you can, but that market's going to develop as well. So there's all these different use cases as a base store of value, a digitally native base store of value, which is kind of like what gold could be if it had these properties that made it easier to use, the transportability,
if you could,
divisibility, that kind of thing.
If you could dematerialize gold, it would be Bitcoin. If you could dematerialize it. Now, I don't think Bitcoin is just gold, right? It's kind of like saying, like, the internet is digital Morse code, right? So what the internet is, what Morse code is to the internet, Bitcoin is to gold. Like, it goes really far, right?
You're not saying it's just
you can take it
digitally. You're not saying it's just a digital version of an analog technology.
Yeah, or even if you do try to say that, that does not mean it's not
more potentially
huge. Yeah. I mean, I think Bitcoin is 1,000x better than gold, right? Because of everything you just said. It can be integrated, it can be built on top of, and because you can move it, you know, it's borderless and it's completely digital commodity. You can do all kinds of things with it. But, you know, it's not just gold. But here's the thing, you know, Bitcoin does not have to reach its full potential to go to $1 million, right? And I think the way to think about that is, a lot of the people in gold right now think over the next 2 to 4 years, and promise you, Frank is one of your bros who thinks this. Gold should at least 2 to 5x, right? Most macro guys think gold should 2 to 5x because we're going to have an inflation boom, and gold's going to be the benefactor of that. 2 to 5x puts gold, apparently its demand at $20 to $50 million. If Bitcoin takes half that demand, if it takes $20 trillion of it, what do you got, Mick? You got a greater than $1 million Bitcoin price. And that's just as an inflation hedge. That's not even touching the bond market or currency or transactions.
It's some serious pumponomics. And the thing is, though, like that's considering gold, Bitcoin as this kind of alternative digital asset class. But then you touch on, all right, what other kind of store of values can it suck in? Which and then you look at the kind of narrative of, or the direction of it going as to like hyper Bitcoinization, unit of account, which is a whole nother philosophical economic debate.
I think
as an alternative asset, as an inflation hedge, 2%.
Yeah, I think it goes. Yeah, so I think it's gold, digital gold, which is it's an inflation hedge, right? First, then the next jump, that's 10 trillion. The next jump would be in the vicinity of 100 trillion, which is like a settlement layer, which would be like taking out bonds. And then I think the third step would be something even bigger, which would be that unit of account kind of currency layer, which would make it, I mean, if that's everything priced in Bitcoin, that's like, I don't know, 500 trillion. And I think I was actually listening to some of the chats. I don't know. Do you listen to Up Only?
Yes.
It's hilarious. I think I was listening. Yeah. And actually, no, I was listening to Uncommon Core with Suzu and Crypto Cobain, and they were doing the bull case for Ethereum. And one of the things I think that you have to disambiguate is they think it's just digital gold. So therefore the market cap of Bitcoin is going to 10 trillion. You got a 10x from here. They ignore the fact that gold itself could go to 50 trillion. So it could be a 50x from here, even just taking out gold. And then of course they're looking at it saying ETH has a bigger total addressable market because Bitcoin, they're not even considering the bond market being perfectly addressed by Bitcoin as a sort of a pristine collateral.
Well, they're not considering
it as a layer.
Yeah, they're not considering potentially Bitcoin as a financial instrument.
Yeah.
As a fully financialized instrument. Yeah, they're just thinking of it as, because it's a very simple narrative to understand. It's like digital gold.
Digital gold is like a Trojan horse, right? That's a way to so governments don't think it's that big a deal. That's the way. So, institutions can understand how to actually price model it to stock to flow and get in. It's like it's a meme.
Yep. All right.
Yeah.
Where are we at? Give me 1 second. Next up. Germany opening up to institutional crypto
JP
funds.
Morgan, I got. JP Morgan is preparing to. Oh, yeah. Yeah, I mean, I called that one out again. Like, Germany is the driver of the, of Europe, really, in terms of being an economic powerhouse. And, it's just an example. This is a global phenomenon. And, Dan Tapiero's post here, he pulled it to the forefront to go, like, this is not insignificant. I think, America is pretty American centric, right? In terms of capital flows that could impact Bitcoin. What about Europe? What about
Asia?
Germany? And of course, Asia.
Asia are the best traders, mate. They just ape in. Oh, they do it. They love it. You got to have some respect.
But you got to have respect. They get it. They get it that altcoins are just a trade too. They play the market hardcore.
Yeah, that's good. But yeah, I think the next leg of the market is being set up right now. So it's being set up right now, and then the final leg of the market is probably going to be some kind of like an ETF being approved.
Maybe if it happens in time.
If it happens in time. I don't know how long these things take, but they've had so many applications, so many organizations getting into Bitcoin. It's behaving a little bit like a mature asset class, even though it's...
Yeah, I hear different things though on ETF. So you get these people saying like, okay, I can take it two ways. ETF is coming within the next 6 months. And I hear that because, I can see how that would happen because of the players who have actually applied for an ETF. Like you got NIBIG applying for an ETF and like Morgan Stanley backing it, right? So when you talk about Morgan Stanley coming in, putting an ETF application on the table, you wonder if that's just kind of like the old boys club comes together and says, all right, now we've got to approve it because we've got, you know, well-branded, safe hands coming in. So I can see that the quality of the ETF applications is just sky high, and there's been so many. And then on the flip side, I hear people say that it's just going to take longer. Like it literally just takes a long time. You know, some people say that the problems that the SEC had with the Bitcoin market being manipulatable is still there, even though they approve like the most nonsense ETFs you could ever imagine.
What's a ridiculous ETF they've approved?
Like like basically almost like gambling ETFs. They approve things like triple leveraged ETFs for going short the market, or you know, or smaller ETFs on, you know, based on really volatile stocks that are triple leveraged, you know, things like that. And you go, how does that have more liquidity than Bitcoin? Or how is that less manipulatable than Bitcoin? They're just examples. There are others. I heard some crazy ones. I can't remember what they were, but there's some funny ones that are actually out there that would make you go, oh, okay, this is a joke. You've literally got something against crypto at this point and you're holding it back. But they've had a change in the changing of the guard. You've got Hester Pierce in there, who's like literally did a crypto lecture series at MIT. Like he was the professor. He knows blockchain. You've got all these new players coming in, and there's a swell of interest. And if you've got all the banks offering different products, I think the SEC might look at this and go, well, they need an ETF to actually, to create functional products, maybe financial products. So, but then I just hear people say, if they want to reject it, they can, or it will still take 12 months. It can't. It's coming, but it's coming in 2022.
Oh, if that comes in September, forget about it.
The bull market continues.
No.
The show goes on.
No, it doesn't. That's the last leg of the bull market. Yeah,
like futures going live in 2017, and it just
went next one
to the floor.
Bit of Willy Woo.
What was the Willy Woo one? Hey, we talked about this. So I said that 14% of supply, traded above that 1 trillion market cap. And Willy is, if you're new to this game and you want to, and you're not a trader, but you sort of want to understand points to sort of exit or entry points to the market based on fundamentals, Willy is probably the best analyst in the space. He's often right. He actually called the bottom at 47K. He said that's strong support. We're not going under it. And, touch wood, we
possibly
that's the bottom.
If we jump over to look, it just depends. I mean, look, if we go to the 21-week moving average, which I thought that we may hit a few days ago when we bottomed out, we still could. You know what?
While you bring it up, I'll give people some background if you are going to bring it up.
Go on.
The 21-week in 2017 was the moving average that the bull market bounced off 7 times. We had 20 to 40% corrections around 6 or 7 times. I think it was 7 times. And the Bitcoin price dropped to the 21-week and then bounced off it and resumed. And we have not hit it yet this cycle.
So that was one thing we were looking at in the lead up when we got up October, we went through this. Was everyone expecting a big pullback down to the 21-day moving average, or at least to the 100-day moving average?
Which color is the 21?
So the pink one is the 21-day moving average. So what is it now?
There you go.
A bit under 45K. It would be healthy. It would be healthy to pull back. I mean, we need a red monthly candle, which we're going to get.
We do.
Don't buy any. Okay. We need some.
Again,
don't buy any and pump up the market. All right. We need a red monthly candle, and we've got like a day left. So
I think, and I want to actually unpack what you just said, because people might not get why you would be asking for a red candle. 2 things. I think you're right, Mick. I think we could meet the 21-week at 47K again. That kind of would become Willy's bottom, and so it's the area of support. Plus, it would be where the 21-week we would hit, maybe in a week or two's time. And then we go from there and we consolidate for another couple of weeks, and alts run, and you pump your degen bags. But the other thing you were talking about there is you to sustain a bull market, you want sustained pullbacks. Otherwise, you're going into a blow off top too soon, which means it doesn't go as high as it could have gone. And it scares people off because the drop is so big and so hard because it's so unsustainable that it scares people off for another year or two, you know?
Yeah,
and people...
Absolutely. And to add to that, like, what is a pullback? A pullback is where it reaches a point where all of these sell orders are triggered, and that leads to increased liquidation and forced selling. And the price dumps down to a point where people are buying, okay? And these buy orders are set. That's why it's a very programmatic asset class, particularly in 2017, if we're looking at it now. What do we have? We had a break up of a new all-time high, pull back down to this 21-week moving average. This is the start of the last bull market, okay? It wicks a little bit down, and then it closes above or right on that 21-week moving average. Again, in that 3K down to 2K consolidation area, which went for June to July, you know, it went for what, 6-7 weeks all up, maybe 8 weeks if you count this candle here. Again, we have a wick just at the 21-day moving average, a close, and then a pump up. And if you look at the volume there,
how good's the next one? It actually just wicks to the 21 and bounces off it.
Exactly. So let's get to the next one. You can see that the volume here is increased. We go into the next leg, and we're at a more, so this was in September, just before the big parabolic move. It wicks to the 21. So all of the buy orders are set as a base at that level. Okay. Big amount of volume. And
can I say it a different way? Can I say it what you're saying, but like maybe in a way that sounds more like behavioral? I think what's happening is when you're talking about a parabolic move or high, you know, moves going up too fast too soon, you're saying that speculation is outpacing adoption, right? So adoption is the rate at which strong hands being people who are trying to use Bitcoin for its utility, a store of value, they believe in the project, are coming in. And then speculation sits on top of that. It's leverage. It's people who are trying to make a quick buck. It's people who don't even understand Bitcoin, but they're coming in for the first time. It's like buy, 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 buy. And then of course, once you exhaust that over exuberance, you know, you're outpacing adoption so fast, you're outpacing demand too quickly. That's when all those liquidations in price targets are triggered, and you drop back. And wherever you're dropping back to, like call it the 21-week moving average here, is basically the level of the actual underlying adoption rate of strong hands. To your point, it's expressed through people putting buy orders in at appropriate prices and getting the price that they want because the weak hands, you know, sell and get flushed out, and the strong hands buy. Absolutely. But that's what you're looking at, right? And so you're looking at moving averages, trying to assess adoption.
And it's interesting because to your point there, so as we know from October, November onwards in the last cycle, it went absolutely berserk. That's the most speculative and the most parabolic move in the market. And then we can see that it dips down to the 8-week moving average rather than the 21-week moving average, which shows you that everything's getting more bought up. It's starting to get really overheated. Now, this is why this
Mick,
cycle...
show me where, Mick, can you show me where you got in? Was it the wick of the top candle?
Okay, so
$20,000.
I bought as a store of value, as an asset to hold for at least 1 year, right about
3 months.
So $19,568. I also bought some.
And tell me where you sold. Tell me where you sold.
Well, look, I mean, I sold down here because I needed some money.
3K
for a holiday. 3,175. Although no, it is interesting. Let me actually talk about this section of the market here. Just give me 1 sec. I just need to pause this for a sec. All right, cool. So yeah, basically moving to the current market, this cycle, I mean,
hey, it's not on the screen. Can you pull the graph up?
Yeah, 1 sec.
So what I was going to say, and I think this is what you're going to say, is we have not gone back to the 21-week moving average. Yeah. And what's interesting about that is what that could say about the underlying adoption and the speed at which, call them stronger hands, stronger participants are coming in, and they're buying it before it even gets to that level, meaning the adoption is accelerating And so the 21 week is no longer valid. I still think it is. I think to your point, we could be about to hit it. And of course, it should be a strong area of support and bounce, and it could just hit that 47K. It'd be a perfect place to bounce from.
Yeah, and just one more. We have on the daily, which probably shows you how fast this market is moving. You know, I mean, the previous pullbacks were off the 50-day moving average. So here, drop below it to the 100-day. That might be it. I don't know. Anyway, moving on. Last point. Was it JP Morgan? Where'd I put that? I don't know. The point was
JP Morgan is preparing to offer a Bitcoin fund to its wealthy clients.
Yes. So more adoption. And how long do you think that would take to be built out?
Can you hear me?
Yeah, can you hear me?
I'm losing you.
Hang on 1 second. I
can hear you, but can you hear me? Because you're frozen.
Oh, I can hear you. Can you hear me now? Hello? All right, sorry about that. We had some technical issues. We should be good now. So JP Morgan, Pat.
Yeah, so JP Morgan is preparing to offer a Bitcoin fund to its wealthy clients. I think, look, I don't think it's surprising, albeit Jamie Dimon was the biggest hater of Bitcoin. He openly mocked it for years, and they've come crawling back. But what I think it's a sign of is it's a sign of, you can't have Goldman Sachs and Morgan Stanley coming in and you not come in. And, we just discussed this. This feels like this is the catalyst for the next leg of the bull run, right? You've got these three banks training all their analysts, designing their products and their funds, quote unquote, building their infrastructure, whatever that means, to onboard all of their wealthy clients. And if you want to see the FOMO rally, them getting in at this point is perfect, right? The price is stagnating. But it's holding around all-time highs. It's sort of sitting at this level, the level we've referred to this whole podcast around, roughly that 2,000 to 3,000 of the previous cycle. It wants to go to 300. It wants to maybe go higher, maybe to 500. It could go to 800. But whatever that region is for that blow off top, we're at base camp. We are sitting at base camp. And what's it going to take? You said it yourself, liquidity. Where's it going to come from? It's going to come from the wealthy. It's going to come from these big players in the industry. And they're all coming in right now. And they're all ready to buy this dip, and they're going to hit the streets and they're going to sell Bitcoin because they get to clip the ticket. It's a no-brainer, right? And what I
love my bags, get me bullish.
Here's why it's such a great product for them all, right? So the best thing about this Bitcoin product for these guys is they are going to go to Mick, you're the client, right? I come to you, I go, Bitcoin, this is very volatile, but it's going up. We've got price targets of 300 to 500K. Citibank, 318K. BlackRock are talking about 400K. I think it's possible. They might not oversell it. They'll say stock to flow model came out. It says around 100K. I think it's easily 100% this year. We offer no other product. Now, Mick, I know Bitcoin is volatile, sir. I understand that, but we've got the best product for you. We are going to hedge your downside risk. Yeah, we're going to clip the ticket. We're going to take a little cheeky 3 or 4%, but all your downside risk.
It's going to go up 200% a year, though.
Yeah. So asymmetric. Okay, so you pay us, you pay me to hedge the downside volatility risk. I will actively manage that. I'll take 4%. You will make 196% off that 200% compounded year on year.
I wonder if
it's a no-brainer, right?
Yeah. Will it be just a kind of exposure to spot long Bitcoin, or will it be more of an actively managed where they're trading around a call position? Maybe that would be a mixture.
It could be a bit of both. But my point is, because it's volatile, there's a lot of money in it for them to design a product where they collect fees for basically protecting their customers from the downside risk. They'll happily. An investor will happily pay Morgan Stanley or JP Morgan 4%, manage the downside volatility, don't allow me to be exposed to that. It's a huge revenue stream for JP Morgan because they know it's volatile and they know they can trade around that position to protect them from the downside risk. And hey, you'll probably make 100, 200% out of it. Call me.
My bags. I can just imagine it out there. You've got like, you know, obviously all the major banks with their high net worth clients. And then you got some little dodgy dudes in a garage, just like Wolf of Wall Street, pitching Aerotine International. Unlimited upside potential.
They're doing their lines of Coke.
They got their Bondi Nose coffee going on.
Guess what, Mick? I've got the best product for you.
There is so once you go into the weeds,
pump their own bags.
Pump it.
But they're just as degen, right? They're no different to the degen traders in altcoins. They want to make money. They want to make a crazy amount of money. All other markets are at an all-time high. There is no opportunity like this on the table. They need to sell product because Wall Street, that's all they do is sell product. And this is a new product in a new market that has a ton of upside, and the volatility is their revenue. That's great. Perfect.
Volatility is opportunity. All right, that leads us into what we want to chat about, which I think is really cool, which is, well, really interesting, and also like, you know, a bit of pumponomics, a little bit of hopium and copium, but basically looking at the current market cycle and super cycle or typical 4-year cycle. I mean, it's almost too obvious, right? The ideal outcome for me as a trader and me as an investor is for Bitcoin to go through a typical 4-year cycle, exactly like it's done in the past. We sell it at the top, and a year later, I'll be in the jungles of Northern Colombia. I'll get a notification on my phone from you saying, Mikey, we've just hit the 200-week moving average, and I'll get on my phone and I'll buy my bags again. But you think it's too obvious a trade, right?
Yeah. So so let's just to set it up. I'd say that the most obvious trade here right now, for those who are trading it, is that Bitcoin is going to repeat the 4-year cycle. It's programmatic, and don't get me wrong, Bitcoin is very programmatic, strangely so, right? It's the supply is locked, and it's a protocol run by mathematics, and so number go up built in. But that the 4-year cycle, the halving occurs, and this thing is going to go to somewhere between, call it 1 to 300K. It's going to go through an 80% drawdown, and then it's going to just do it again magically in 2025, right? Now, I know it's done that in the past. I totally get it. But, you know, Mick, have you read that book, what was it called? Reminiscence of a Stock Trader?
Yeah.
Stock Operator.
I'm like halfway through.
Old 1930s book. 1930s book, right? It's like,
it's good.
Yeah, it's got so many amazing quotes, and one of them that, you know, plays on my mind a lot is, you know, once you have the keys to the kingdom, they change the locks. And that's what I see in that trade, which is everyone's expecting it. You could make untold sums of money, therefore trading it. And once that knowledge is in the market, it's effectively priced in.
So what you're saying is basically the kingdom is obviously the Bitcoin market, the citadel, shall we say? But you're saying once everyone knows that,
the keys to the kingdom are, we're just going to watch it go up.
Okay.
I'm just going to sell the top. I'm going to buy the bottom, and in 2025 it'll go up again.
You're saying,
and I'll make $1 million. Untold sums of money.
When the trade is that obvious, that it becomes redundant, because every market participant or every market participant with significant capital knows that that's going to happen, and therefore it won't happen, basically.
And I could take it further and say that, you know, the problem with super cycle is what does it even mean? Like there's a price target, there's a time, you know, like, is it, you know, a super cycle could be just a dampening of the bear market. So it only goes down 40%, not 80%. A super cycle could be, it goes to $1 million this year, but it still dumps 80%. And you could still say it's probably a super cycle if it goes to $1 million and then dumps to 200K. Another one is it just grinds up for the next 4 to 5 years.
Okay.
It's probably a super cycle.
Let's position it this way. Forget the word super cycle. Was that kind of, I don't know. Let's forget that term, and let's say it breaks its current price history and programmatic pricing that we've seen, right? And it
Yeah,
does
or
something
another way to say
different. The 4-year cycle,
yes,
it breaks that. Okay, so
but you could almost say also, I would just say a super cycle would mean it's just very hard to trade.
yeah, so it breaks what it's currently done, the 4-year cycle. My issue with that is if you look at Bitcoin moving in these 4-year boom and busts, is yes, it's so obvious. It's so obvious now that we've had a few of them, that
So
it's almost
obvious.
too obvious. However, we've got to look at who's coming into the market, what kind of buyers are coming into the market, and also potential macroeconomic issues, which, you know, could also usher in a new bear market. So as you said, we have both speculators and we have like buyers who are actually adopting it and will never sell and will continue buying the dip. All right. As the market gets more parabolic, you have more speculators coming in because number go up. But the market, like, it needs to come back to a certain level in order for the strong hands to keep buying, who are adopting it as a store of value that they're not looking to trade, that kind of thing. Now, if we go and if we break up above 100K and we go to like 200 or 300K in a couple of months, the speculation is going to be so high, the leverage longs are going to be so high that it almost has to come back down to reality and go into another bear market, because Bitcoin as a mainstream store of value, as something that's been around for a while, that everyone has a little bit of, it's in their portfolio, they custody it, they earn a little bit of yield on it, they use it as a collateral asset. That takes time for that to develop, all right? No one was really talking about Bitcoin as a fully financialized product 3 or 4 years ago. It's been around for 12 or 13 years. It's going to take another 5 or 10 years for it to be fully integrated into everyone's portfolio and also the products built out and that kind of thing. So I think it just needs time. And that's why I think that, we will have a blow off top. It may not be as brutal as 2017, but if you look at the price action now, the crazy thing is it's actually going up more vertical than in 2017. So I think, and the other thing is the meme of, well, institutions, they don't sell, they're looking to buy it and they're looking to hold positions and stuff. Mate, listen, the ones that got in at 20K, when this thing is at 200K, they have a literal, well, not literal, but they have a duty to shareholders, and also just from the simple fact that they're in that much profit, they're going to be taking a lot of profit off the table. Okay. And this thing is going to get sold down before it becomes more boring. Like in 10, 20 years, Bitcoin will be more boring because it's reached its price equilibrium. But I feel like,
can I ask you, what are your price targets? Call it the top and then the bottom, and just give me a rough sense of time. So all of that is to summarize. Right. And I agree with you. I think all those guys, all these hedge funds, all these Wall Street guys, they're no different to a retail frenzy. They'll FOMO in and they'll FOMO out just as much. So, but what are you actually saying? You think what are you targeting at this? Like, just to put that conversation in perspective, what does a cycle look like?
All right, cool. So let me just quickly. I won't jump into the full detail, but I'll just quickly open up the chart. Okay, so I will, strong opinions loosely held. I think it could look something like this, and I'm happy to be wrong, but this is a consolidation period. We have another leg up to about October or something like that. Maybe it goes between 200 to 300K. That's so bullish. That's a historically insane bull run. Okay, 200 to 300K isn't like I know a lot of people are saying it's going to go higher, but in 2017, a lot of people were saying it's going to go to 100K and it didn't. All right. That's still a historical bull run, and Bitcoin is clearly here to stay. So if it was going to repeat the 4-year cycles, does it do the same multiple as it did in 2017, where it did a 20x? Okay. Maybe it does a 5 or a 10x. 10x would take it to 200K. Maybe it overextends that a little bit. All right, we go up here, and then maybe the bear market goes back down to this kind of like 60K level here as it gets sold off, macroeconomic conditions change, maybe interest rates rise. Everyone says that Bitcoin's going to zero.
So you're essentially pitching, it's sort of the 2017 cycle dynamics in terms of height, length, bull market, bear market?
Similar.
And so on. Yeah.
Now, what will make me change my mind is if we maybe see a long consolidation period, more shallow pullbacks, you know, maybe
which we have seen. We have seen more shallow pullbacks, right? There's definitely a dampening of volatility. Like the last cycle, there was 35, 40% pullback.
Yeah.
So far, we're only getting 20 to 30 max, and we're not even pulling back to the 21 week yet. We may hit it now, but
yeah,
there's definitely.
Yeah, no, you're right. You're right. So, but it just, you look at this part of it and it's just like, it's gone up insane levels. So yeah, maybe look, if it's a little bit more of a gradual rise and becomes a little bit more boring, maybe then we can look at, okay, the 4-year cycle price model is kind of broken, and you know, it will become a lot harder to trade. Now, the other thing is, I've got this point I wanted to make about the halvening. So the typical narrative is halvening happens, supply shock, enter into a bull market because there's less Bitcoin coming onto the market. Do you think that changes over time as the halvening has become less and less, and the percentage of new supply that's issued becomes less and less, as like the percentage compared to the total market cap? Because it's a less aggressive halvening.
Yes.
So there's less.
It is.
The actual halvening of the supply schedule, has less of an impact.
Yeah, so it does. I mean, it has in the past. So, I guess for everybody who's listening, it would be that, how many viewers do we have again?
3,500.
Oh, good.
Yeah.
So the previous cycles, obviously the amount of when, Bitcoin was first, conceived, it had a 50 Bitcoin per 10-minute block, and then it went to 25, and then to 12.5, and now it's 6.25. And of course, that proportion, or quote unquote inflation rate, is becoming less and less significant to the total, circulating supply of Bitcoin. And so when you look at the previous market cycles and let's just call stock to flow the even though it's obviously controversial, but it followed a certain trajectory based on market cycle peaks and based on that stock to flow model, and the inflation rate significantly reduces, meaning that the peaks and the bull markets are less aggressive based on that. So, I think if you actually, the person I know who's following it really closely for his price target is Dan Moorhead. So he's got a 116K price target for this based on the inflation rate change, because he saw he's measuring the peaks, and he's saying that 116K would be the peak based on that inflation rate change. And it's actually tracking it right now almost to the dollar as of last week. But
that would mean that the bull run ends in like June. Because if it breaks out, it will hit that.
Maybe. Yeah. I don't know about. It's hard to give a time and a price target, but yeah, I mean, who knows? But if I'm going to argue the other side of what your pitch on the repeating cycle, and if I do really believe that once you have the keys to the kingdoms, they change the locks. What am I actually saying? What locks have changed? Like, what have the locks changed to? And people make money two ways, right? They buy and they make money because something goes up, but they also make money by not selling, because that's another way people lose a lot of money, is they just never held on to the thing that they should have held on to. And I think that would be the argument for Bitcoin, is that the surprises are all to the upside, that this thing could go, it could go as high as 800,000 this cycle. And what does that look like, right? Like it could be a lengthening cycle. It could go longer. So as opposed to doing what you think, and everyone sort of sells in that that Q4 period at 200 to 300K, like there's no way it's going higher. We could go a lot higher. We could take out the market cap of gold, because people look at Bitcoin and they go, this thing is better than gold, and it charges past that 500,000 price point, which would be roughly gold. And the thing I go back to, and it's funny, you see people online talk about, they kind of smirk at this time it's different, right? Oh yeah, it's always this time it's different. Yeah. But sometimes it is different, right? The other meme that Bitcoiners and people in the industry understand is gradually then suddenly. So you can't gradually then suddenly is this time it's different. And the question here is, Mick, and to everybody who listens to this, is this time the gradually then suddenly this time is different moment? And the way I think about that is, In the past, like I might be biased because I wasn't in pre-2017, but I think it was speculation that this thing was going to be digital gold. It was a speculation, a pure speculation. I'm sure, don't get me wrong, there was hardcore Bitcoiners that just believed, but ultimately, most people who now are holding it as a store of value were buying and selling into that rally. I mean, even Preston Pish sold at the top of 2017, and look at him now, he's never selling, right? So that blow off top in 2017 was a huge run up. People did call it was going to go to 100K or $1 million, or this hyper Bitcoinization. And of course it wasn't. And everybody was in it as a speculation. Like, I'm not saying they didn't believe that it could be more than a speculation, but the point being is they were in inadvertently weak hands. And so it sold off. Whereas now, if the asset is financializing, don't get me wrong, I still think, to your point, institutions will buy and sell. They'll be degenerates in their own way, but they'll dampen the volatility. They'll also be buying dips. They'll also be net in a core position. So they're not selling all of it. So they're, by definition, they're not Micky with 10 million in Bitcoin and he's got to sell to realize his lifelong dreams of having some fuck you money. They're people who are actually got a little bit more of a call it an agnostic approach to the money that the capital that they allocate to Bitcoin. To your point, they will sell just like Tesla did, but Tesla still have a core position and they'll retain a core position, especially if they can, like Ruffers that sold half their position to actually now their net zero profits are in Bitcoin. They might not ever sell that. That is technically way stronger hands. That 100 mil that they have, if that was you with 100 mil, you'd be selling and partying on a yacht somewhere, right? But they're not. They're holding. So I think what we're talking about is net adoption, right? If that's happening, that means this is an asset. This is being financialized. Everyone must own some or utilize Bitcoin, both the asset and the network. That creates a core position that everybody holds, and it dampens volatility, and we may grind up for years on that basis. Now, the other aspect of this is, you mentioned the halvening, and the 2025 halvening is like puts Bitcoin at $1 million, right? Like it's a big number that
is that
we
because
go to post.
Yeah, is that because of the function of the halving and how much supply is coming online, or is that just because of the narrative? Because do you get what I mean? The halvening, the impact of the halvening is less because it'll go down like 1% a year or something.
Yeah, no, I agree. But
1.2% a year, I don't know what it is, but it'll be a very low percentage. So does that have and by at that stage, all of the new Bitcoin mined will be a blip in the ocean, is what I'm saying.
Yeah, I mean, people argue that now, but look, I mean, at the end of the day, the best models that we have and models that people are using, including stock to flow, puts it at $1 million, and that's the trajectory which it's currently following in terms of 100K beautifully, but also the cross asset model that is not related to stock to flow, which is therefore more appealing to the people who criticize it, puts it above $1 million. So I think what I'm saying is whatever that number is that you have and whatever the industry decides to model the impacts on, it should be priced in early now. It should be priced in. You should run a discount cash flow model and say, I could buy that in 2022 and get a 20% return and be happy, because 20% would still be bigger than what I would get on a stock portfolio. So what I'm saying is that the halvening is literally front run from now if this asset financializes, and people will say, well, it's not an efficient market. Efficient market hypothesis is bullshit. Of course, in the strong form it is, but in the weak form, I think it's relevant, right? And so I think in the past, people said, oh, the halving's priced in, and people, and of course it looks like it wasn't if you look at the charts, because we've just gone up only post the halving. And the reason why I think that the halving wasn't priced in the past, or that the asset itself wasn't priced in, is because people did not understand the asset. So it wasn't financialized. It wasn't, I'm long PayPal and short Bitcoin. It was, Bitcoin's a scam. Bitcoin's going to be banned by governments. Basically, the risk of Bitcoin was incorrectly priced,
significantly,
and therefore, and it was incorrectly priced because people don't understand it. And if you don't understand it, you can't effectively price risk, and therefore the market cannot be efficient. Whereas if everybody's in, like we're watching it happen before our eyes, now analysts, pricing models, cross-asset models, that will create an understanding of Bitcoin, which will allow it to be efficiently priced. And all that's doing is pricing it way higher than it is today. And so that could continue for the years now. Like, so, you know, there's different people you can listen to on this. Obviously, Dan Held talks about it. You know, Bitcoin Tina talks about it. You know, Max Kaiser. Max thinks that it's going to 220K this year. It goes to 350 next year. Then they have a blow off top.
Okay, what about if interest rates rise in Q4 because inflation's rising, and equities dump and Bitcoin dumps with it? That could usher in a new bear market. No.
Yeah, I mean, there's a number. To your point, I think there's obviously macroeconomic factors that could change the outcome.
This is the problem. Like, a lot of people don't think about where it is in society and how it will perform in different environments.
Yeah, and I think that the argument I would have against it dumping because of a raise of interest rates is because Bitcoin is an inflation hedge, and so it could perform extremely well in the back half of this year. And to your point, that's, you know, if you look at the expanding monetary supply, it should go way higher than the equivalent 2017 bull run, because this is the money supply has gone exponential, right, in terms of the amount that they're expanding the supply compared to last cycle. So every price target should go up based on inflation and monetary supply. Then the other aspects, and that's how it performs as a risk-off asset. But then as a risk-on, we've got people building. This thing has technical utility being built on top of it as software eats the world, and Bitcoin is integrated into Apple Pay and you know, PayPal, obviously, and every other digital wallet you can think of. And that technical utility, Strike doing payments, that expands the network, and that expands the strength and resiliency of the network. But it also means that the value and the network will lock more Bitcoin up, right, and create even more value. And adoption, because the adoption cycle is completely different to gold. I mean, gold is essentially fully realized, other than people wanting to find an inflation hedge. You've just got millennials adopting Bitcoin at a way faster rate than anybody's adopting gold. So there's just multiple exponentials at play. Some are risk on, some are risk off, and it's really hard to. Bitcoin is correlated for short periods of time, you know, to different parts, macroeconomic factors. But overall, it's almost a win-win in the long run. So the only question is does it sustain an upward trajectory far longer than the previous cycles, because people price in the future value of this thing based on halving and inflation rates, based on a risk curve where we just dramatically cut off the risk of banning it. And if you understand anything about the median of a risk curve, and you cut off the left tail of all the governments will ban it, or it's not a store of value, it's a criminal activity, it dramatically moves the median and the average to the right, which is a dramatic repricing event.
And those narratives still haven't been resolved by most investors that haven't gotten into Bitcoin yet. Those narratives are still around. It's like, I follow some non-Bitcoin investors on Twitter and things like that, and they post things like, one of them posts quite a bit about Bitcoin. He's a precious metals miner, and he says things like, like memes about how it's not scarce because you can create an altcoin out of thin air. Like, you don't get it.
We've been there, we've done that. You don't get it. You don't understand it.
And here's the thing: not scarce because you can create a shitcoin, and that shitcoin is Bitcoin. What the fuck are you talking about?
So that's all those critiques. This is the cycle. I think this is the cycle. When we talk about
it goes mainstream. It goes mainstream.
It not only does it go mainstream, you don't have to understand it to use it. That's the financialization event, right? You don't have to understand it to use it. It's like an iPhone. You and I use an iPhone. It's abstract, that we don't understand the science necessarily behind it, how all the features work, but we understand that it works and we use it. This is the cycle where those narratives get stripped away. And, you know, once 50% of Goldman Sachs are holding it and you're at your country club and, you know, you're making all this money on Bitcoin, people, they don't just FOMO in, but they own it because they now believe someone else has done the due diligence to make this thing, to believe that this thing is what it proclaims to be.
Way less
risk.
That is
way less. And it's not even, people aren't even measuring the risk. It's de-risked by the going mainstream.
Collective knowledge and understanding of what it is, and your mates are saying, "Yep, I've got it." Yeah, trust, social trust, that kind of thing. Look, PBITTY, I'm still leaning towards, unless I see something on the charts that says, yeah, this is just going to grind up and not have a big blow off top. Still leaning towards a bear market. What does that look like? I'm not sure. Super bullish if the bear market goes down 70 or 60%, means that the downwards volatility in that part of the cycle is lessened as well.
I mean, can you imagine if it's only a 40% dump in a bear market? I mean, we could ride that out without a sweat. 40% is nothing.
Exactly. It just depends and how long it goes for and what it looks like, kind of thing. It's an interesting market. I'm so glad and happy and excited about the future of this industry, the future of open finance and DeFi as well. Once you have a play around with these DeFi pools, look, you're not bullish on it, but you will. Everyone gets into DeFi at the price that they deserve. Yours will be a little bit higher because you're a Bitcoin maxi. Mine is right now because I like playing around with it and it's cool.
I do like the idea of DeFi though. Don't get me wrong. I like
it's cool. And look, I don't know how it's going to look in terms of regulation, in terms of traditional finance. Integrating into DeFi. Perhaps they've all got their own pools and projects and things like that. I don't know. Maybe it's just a winner takes most scenario, and banks become redundant in terms of their involvement in the space. That'd be also quite interesting.
This is the show that's going to have to go there because you're so in, not this show, but this show.
Yes.
Because you're so, you're interested in it. I'm not toxic about discussing it. I'm happy to explore those ideas. I think there's reasons to be cynical around at least the current state of DeFi, but there's reasons to believe that there's aspects to it that we just want, regardless of whether it's in its right shape. We want it. The market wants it. I don't believe it's there yet.
I think the challenge is with DeFi and with looking at Ethereum as well, is we're not technical, we're not developers. And in order to discuss and look at the potential scalability of Ethereum, because right now it's shocking to use. It's like 100, tried to make a transaction the other day, like $250. Insane. Now, I think it's gone down now, but it's not scalable at the moment. But you need to be very technical to understand and speculate on whether it is going to be scalable. And then once you figure that out and you think, all right, will Ethereum take most of the market share as the base layer of decentralized financial applications? Is it scalable? So can it actually? And then to your point that you mentioned a few weeks back to me, it's like, what happens if it just becomes, what you mentioned that governments will just ban the on-ramps to these applications, which is the same argument that people use against Bitcoin about government banning it. So,
well, first of all, obviously that's funny that, Bitcoin gets all these strong armed arguments that Bitcoiners have to defend and no altcoin ever has to defend against them. But no, I wasn't saying that. I think I was saying along the lines of, if Ethereum was decentralized, then they would be forced to face into the fact that the regulation doesn't currently work. And if the regulation doesn't currently work, they would allow centralized institutions to perform the same activities as decentralized finance as it currently stands. And if they can do that,
what blockchain are they going to be using? What platform are they going to be using?
No, because if the government regulation, the opposite of banning it, if they can't stop DeFi and it's truly decentralized and it's uncensorable, they actually allow, the regulation opens up, and then actually you move off blockchain anyway because centralized solutions are faster, more efficient, etc.
Interesting.
So there's a number of ways. There's a number of scenarios that you actually have to go down different branches to work out when does it win and why does it win and how does it win.
So BSC might be the centralized platform that's trying to build and compete with Ethereum, but actually kind of shoots itself in the foot because traditional finance entities just go, oh, well, BSC can do it. They're basically centralized, so we'll just build our own platform, our own chain.
Or conversely, BSC flippins ETH because they can do things more efficiently because they're slightly more centralized. And if the regulation doesn't come, then why not? If it's better, I mean, I don't know if it is, right?
There's so many avenues to go down with this. Like, you're asking is open finance and DeFi the future? That's the first question, right?
Well, what they're really trying to achieve is cheap, uncensorable finance. Not actually even decentralized, but the point of saying decentralized is it's cheap, uncensorable, right? And and there's just different scenarios in which you can still have a centralized version of it and actually outcompete the decentralized version of it if, for instance, the governments don't ban it. So that's another point. I think it's not just what you said about being technical on it, because I think there is complexity theater happening in some of these altcoins where, if you've ever worked, you know how technical people can talk technical mumbo jumbo, and it's just actually a way to obfuscate the facts. And to be honest, sometimes they're so buried in the technical that they don't actually understand, the bigger picture. And the bigger picture around some of this is actually first principles conversations like we just had around the economic incentives of the token, the economic incentives of the network. Then because what is money? The monetary theory that even makes sense, and whether Ethereum fulfills, for instance, those qualities, and then is it and also how can it fulfill being a money? Because the latest narrative is ultrasound money and be perfectly scarce, and yet create computational abundance to utilize the network. To your point, the fees are so high. No one wants to pay super high fees for. How's a guy in Nigeria going to pay $250 to supposedly borrow money on the the shitcoin that's built on top of
a lot of money locked up there with princes, mate. I've chatted to a few of them via email. Don't discount Nigeria.
I'm not going to discount them. They're Bitcoiners, bro.
Yeah, it's probably a conversation
we'll talk about
another time. We're gonna. I'm so keen to keep researching this space, and I'm an IQ 58. I just kind of trade off a lot of the time my gut, which so far has served me pretty well. But in terms of this, I actually really want to get into the weeds of it, because I think if you're wrong in such a big way that you're missing out on, something that could be as big as, you're missing out on one segment of the market that could be potentially huge.
Let's close out. What's your portfolio allocation, percentage wise?
I just bought some more Bitcoin with some fresh dirty fiat yesterday. Probably I'd have to quickly have a look. Probably, I don't know, 91,
roughly
92% Bitcoin. Okay. Let's call it 90.
Yeah, I'm
100%. 90%.
Yeah. So I'm 100% Bitcoin. So what people can expect is it's mainly a Bitcoin podcast with 10%. You're trying to get rich off some shitcoins.
Investing in the future, but whatever.
Oh, sorry, investing in the future. Sorry, fundamentals.
Yeah. Investments, not trading.
Should we wrap it up?
It's been real. It's been 2.5 hours. If we get more than, it's been a while.
If you're still listening, you're crazy.
Yeah, nutters. Let's get fucking bullish.
Show number one went okay, right?
This is good. It was a lot of fun. Awesome.
I appreciate
All right.
that. I thought it was good.
Wrapping up. Thank you very much, PBITTY.
Micky does Bitcoin.
We'll talk soon, mate.
All right. See ya.
See ya.